Give me a minute. Today, we are going to be running through the summary of all that we have done in the last 4 days. Today is day 4 of our 5 days crash course. Fair Value Gap Trading Strategy 2024 Simplified. We have been able to successfully simplify the fair value gap trading strategy, and we have been able to run this through for the people who started from day 1. We started talking about the risk management. We shared the PDF for the risk management. We went ahead to go talk about day 2, where we were discussing about fair value gap in itself. Then we went over to day 3, when we were talking about traders foundational guide for fair value gap trading. We mentioned quite a number of stuffs. So, and today is day 4. We are trying to summarize all that we have been able to do in the last 4 days, all that we have been able to do in the last 3 days. Today is day 4. We want to summarize it here live on the charts. So for the benefit of those who have not gone through day 1, day 2, day 3, I'm going to summarize everything that we have done on this within this past 3 days. I'm going to summarize it here on day 4, and then we are going to look at of course, what we mean in the terms of drawing of all we have discussed. Tomorrow is the last day for the session. Tomorrow we are going to place trade, live trade. Tomorrow is live trading. So get your $30,000 demo account ready, because tomorrow we're gonna make some money. Some serious money is going to be made here tomorrow. So please, if you can hear me loud and clear, I would like you to go to the chat box and put 1. Let's start from 1, because before we end this call, we might get to 9. So let's start from 1. If you can hear me loud and clear. Loud and clear, let's start from 1. Thank you, Samuel Udo. Thank you, Catherine. Thank you, Barrister Jimmy. Thank you, Ijoma. Thank you, Catherine from Canada. Thank you, Mohamed Bala. Thank you, Aboya Olivia, Ojo Samuel, Ojo Sunday, Kola Oni. Thank you, all these guys. Your name will be recorded live on my YouTube. I am right here on XAUUSD. This asset is called gold. And the first day when we started discussing this strategy, we said we are going to pay attention to number 1, gold. Number 2, we said we are going to pay attention to WTI. WTI is US oil, Western Texas oil. That's the second asset we are going to pay advantage. We are going to pay attention to this second assets. Throughout 2024, we want to focus on gold. We want to focus on WTI, which is West Texas Intermediate Crude Oil Cash. Sometimes some people call it US oil. Some brokers call it US oil. But that WTI is the general name. WTI is the general name. Fredo, if you unmute your mic again, you will leave this class. Thank you. The next asset here I'm seeing here is US oil. It's the same as WTI. The difference here is just the broker that we are opening. The same asset. So permit me to close this one. We are not going to use it. So I have WTI, I have gold. What's this third one? This third one is, let me see, Euro USD. I am not really interested in Euro USD as class of our asset. I prefer GBP USD. But permit me to allow it to remain on our watch list. I prefer GBP USD, which is this one, pound US dollar. We are going to focus on pound US dollar. Permit me, I'll remove all of these guys, because we'll analyze all of this in our examples today. Today and tomorrow, we'll analyze all of them. I don't want you to see anything. I want you to see the naked chart the way it is, and then we would take it up from there. So this other one, what is this? This one is, let's see what it is. US 30, yes, Dow Jones. US 30 is Dow Jones. We are going to pay attention to US 30. Oh, yes, we are going to pay attention to US 30. Yes, we are going to pay attention to US 30 in 2024. The whole of this year, we'll be trading US 30. We'll be trading gold. We'll be trading WTI oil. We'll be trading GBP USD. pounds. Bitcoin, we will not trade it, but we will be watching it because there is a crazy announcement that came today on the Bitcoin. That is the ETF announcement for SEC, America Security Exchange. They want to list Bitcoin. So that thing pushed the market high to $49,000, almost $50,000 today. But then the market still, is still within that range, and something is happening here. I cannot tell you exactly what is going on with the Bitcoin. We are just watching it. We are not really trading it. The next one I see here is DXY. DXY is a dollar index. We are not also trading it, but it's also on our watch list because we want to pay attention to what is happening with the dollar basket. Why are we paying attention? Because of the GBP USD, because of the dollar index, the other indices around the US market that we are trading. So we want to know what is happening with the DXY. DXY tells us about the strength of the dollar. So write it down. United States Dollar Index, the DXY. It tells us about the strength of the dollar. How strong is dollar? When the DXY is going, what am I trying to say? You need to know if the dollar is going up or if dollar is getting stronger or if dollar is getting weaker. You get to know by when you analyze the DXY. So we'll leave it on the watch list. There is something we don't have here on the watch list. Who can tell me? If you have been in the class from the first day, you should be able to tell me what we don't have yet. We have GBP USD, we have US 30, we have gold, we have WTI. What else do we need to have? If you have been in the class, if you have read the first S&P 500, thank you. We need to have S&P 500. That is Standard & Poor's. S&P 500 is actually called US 500. S&P 500. You see, this is it. US 500. It's the same as US, but I can write S&P so we don't quarrel with some people who are saying, what is US 500? See it. That's it. S&P. This is not S&P 500. See here, S&P 500. S&P Index Catch 500. Vantage Market. So let me go with this one. This is Vantage Market anyway, no problem. Let me take it. I've added it to the pair. There's something again left there. Who can tell me what is left? NASDAQ 100. Yes, that's US 100. We'll go to the watch list. We add it. NASDAQ 100. So today's class is starting with TradingView. It means that all of you here, you can see the website www.tradingview.com. It can help you to, NASDAQ is US 100. But for the purpose of our freshers, I don't want to, this one is directly from NASDAQ itself. So I accept it, NASDAQ. It has been added. NASDAQ 100. We have NASDAQ is here. We have S&P 500 is here. Remove all these guys. I don't want anything on my chart. We have S&P 500 is here. We have WTI is here. We have gold is here. We have US 30. We have GBP USD. These are the assets we want to focus on. Yes. Now, on all of these assets, we want to always place trade with we want to always place trade with 1:3. We want to always place our trade with a 1:3 risk reward ratio. 1:3 risk on all our trades, always 1:3. What do I mean? This trading view on the left hand side, this button here, these buttons here, they are active buttons. You can see long projection, that is buy, short projection, that is sell. For example, I pick the long projection and I drop it on the current price. If I'm buying, I want the stop loss to be here. I must look at this projection, buy projection. I must make sure it's 3. Look at it. Risk reward ratio 3. That means the stop loss versus the take profits. So if I have my entry around this point and I'm in the market and the and the market was favorable for me, if the market was favorable for me, it means that from here to here, I make 3 portions in the market. That is the reward. But if the market is not favorable, it means from here to here, I lose 1 portion in the market. This is very, very important. So this is for risk reward ratio for buy. Then for the sellers as well. For the sellers as well, let's say, for instance, we have an analysis here where we want to short, we want to sell. So I'm going to use the projection for short position. So I'll place it on the current price where I want to enter the market. Then I will set my stop loss at 50 pips. Stop loss, I'm seeing I need 50 pips. Yeah, that's 50 pips. You see the stop loss? 50 pips. Actually, I have to set it at 50 pips exactly. 50, this is 50. So this is 50 pips stop loss. And that area of stop loss is 38196, 3819, whatever it is. I can't really say right now. From here to here, then from here down to 3. That's 3. Almost 3, right? 3. So that is 1:3 risk reward ratio for a sell position if we are going like this. So that is the risk reward ratio if we are selling. Yesterday, we ended yesterday's class by talking about daily bias. Yes. We ended yesterday's class by talking about daily bias. What is daily bias? Daily bias is a method of knowing where the market is likely to go the next day. I repeat, today is Thursday. Tomorrow is Friday. If you look at the chart right now, this is NASDAQ 100, American stock or index, sorry. This is today's movement in NASDAQ, today, T. All of this happened today, this one. This was yesterday's movement in NASDAQ. This green happened yesterday. So I've seen today, although today is still going on, I've seen yesterday. Yesterday is still going on. Sorry, yesterday has passed. I beg your pardon. From the look of today and from the look of yesterday, I can tell what tomorrow can be. The process of telling what tomorrow can be in the markets is called the daily bias. Yes. Yes. It's called the daily bias. This is today, this is yesterday. All right. How do you do the daily bias thing? This is the first thing I want everybody to know, to learn. The first thing I want everybody to learn in terms of all that we have learned in the markets. What do? You go to the tool area in the trading view. The first icon, is it the first one now or the second one? The first one is having to do with the crosshair, the dots, all those stuff. The second one having to do with the trend line. It's all about the lines, right? The second one having to do with the lines. You pick the trend line, this trend line, you pick it up. This is today. This was yesterday. Mark the tip of yesterday. Cross it over. Yeah, because this is bullish. So I don't want to go mark the downside because it's bullish. So I don't want to go mark the downside. There's no need. So once we have done this on that trend line, I try to make it straight, right? Now, you now say, today has not finished, but market is going to the bullish side. If this market continue rising to the bullish part and today ends, what is the time now? The time is 21:26. So we still have 21, 22, 23. We still have 2 hours before the end of today. See the remaining hours before the candle expire. We have 2 hours before the end of today. 21, 23. You know, the end of today on this market is not the end of today of our 24 hours calendar. The market closes before the day ends. Yeah, you need to know that, right? Please. So don't say, James, this is just after 9. I you say 2 hours to end of today. I'm seeing from the trading view now. We have only 2 hours before this candle candle ends. When this candle ends like this, the way it is right now, bullish, you can see that the candle closes above the tip of yesterday. This is the tip of yesterday. If today's candle finally ends and closes above the tip of yesterday, it simply means that tomorrow is going to be bullish. So when I ask you the question, what is the bias for tomorrow? Bullish. So if tomorrow's bias is bullish, it is a very important information for the trader to know that tomorrow we are looking for more of buy opportunity. If we see a sell opportunity, we should be very careful and even scared, because the bias from the daily time frame is bullish. Am I communicating? I'm sure this information is clear. I'm seeing so many things. Yeah, www.tradingview.com. This is where I am. I'm seeing so many things on this chart right now that is what I'm supposed to mention, but I don't want to mention it because I don't want you to get confused. I'm seeing gap. I'm seeing volume liquidity. I'm seeing quite a number of interesting stuff on my chart right now, but I don't want to talk about them. I want to focus on daily bias. I've shown you one daily bias. If today's candle, I didn't say tomorrow is bullish bias. I say if today's candle finally ends as a bullish candle, closes above the high of yesterday, then tomorrow is bullish. You see, there is condition in what I said. There are several conditions. Now, for those of you who are still a little bit confused about open, close, high, or low, let me show you again. This, for example, is a bullish candle. This is called candle low. This area is candle low. This area is called candle high. This area is called candle open. This area is called candle close. So if we mark the candle high and the next candle of the daily closes above that candle high, then these two candles have indicated to us that the next day is a bullish bias, which of course you see it respected that bias. It's actually pulled down, but it still went up as per daily bias. Very good. I have a feeling right now that a lot of people understand what I've just said so far, but let me go and show more example for the benefit of others who may not follow what I've said. Maybe if they see other examples, they'll be able to grab it. Let me go to S&P 500 and see what are we expecting as per daily bias. This is today. Yes, this was yesterday. So what do we do to find daily bias? We pick this candle is on the other side, on this level here now. So we pick this and cross it here. That is all we need to do. Today versus yesterday. And again, if today closes, right now it's not trying to close above this line. But today has not ended. We still have about how many hours? We still have 1 hour, 28 minutes before this candle will end on this pair. You know, some trade will close before another one. So it's what you see, you analyze now. There's 1 hour, 28 minutes for this candle to end. If this candle ends, whether as a red candle or as a green candle does not matter. This is S&P 500. It doesn't matter whether as a red candle or a green candle. That doesn't matter. The color doesn't matter. What matters is the tip. This swing high. Sorry, did I say swing high? It's swing high. Because there is a candle to the left, there's a candle to the right. So this is a swing high actually. Oh my God, but not swing high because this one is already above it. So it can't be called swing high. Sorry. So it's actually candle high, not swing high. Candle high. If we mark the candle high and we trace it like this, and we now say, okay, this candle here, is it closing above the candle high? The answer is no, it's not closing above the candle high. Therefore, the bias cannot be upward. No, because it can't close above the high. Simply, the bias is downward, negative. Negative bias. Why? Because the candle cannot close above the previous day high. However, if this candle surprises us in the next 1 hour, 27 minutes, and closes above previous day high, our bias is bullish for tomorrow. I am very, very sure right now that more people have understood what daily bias mean and how to mark daily bias. So right now, if you understand, right now, because we say practical, go to your phone, open your MT4, open your MT5. Everybody, classwork. Everybody, classwork. You are on this call. I'm watching the list. I'm watching everybody now. Go to your book. You see the way I opened my chart, I expanded my chart. I was more focused in today's candle and yesterday's candle. Please don't shrink your chart and show me all the whole candle in this word when I say submit. No, I say only the candle for today, only the candle for yesterday. That is where my attention is. We want to talk about daily bias. We don't have business with other previous candle. Our only business is the candle for today and the candle for yesterday. We mark the tip and then we check if it's going to cross above for us to go a bullish bias, or if it's not crossing above for us to go a bearish bias. Right now, I want people, everybody, Aboya, Olivia, go to the group, screenshot your trade, mark the candle high, and show me for that of WTI. Show me that of WTI. Somebody else should show me that for gold. Somebody else show me that of US 30. Somebody else should show me that of GBP USD. Somebody else should show me that of I think that's all. Let's go. Go to the group now, the WhatsApp group. Take a screenshot of your MT4 or MT5. Open WTI or open gold or open US 30 or open GBP USD and take a screenshot. After you have marked I want everybody to do this classwork now. I want to be sure. Because when I say homework, a lot of people don't turn it. When I say submit it later, they don't turn it. So right now on the Zoom call, take a screenshot of the daily candle, mark the candle high with respect to today's movements, and tell us what we expect. Well, you can't really say what we expect. You can only say that if the candle closes above, we expect a bullish bias. If the candle cannot close above, we expect a bearish bias. That's the only thing you can say. You cannot for sure tell us that this candle now is indicating a bullish bias or bearish bias. You can't, because you cannot tell the future of the market. You can only tell the current time of the market, and then you expect what will happen. So I'm looking for the group to see the first person that will drop it in the group. Who is dropping it? Daily bias. I want to see that somebody can mark daily bias and drop in the group. I want to see that. Please, I'm waiting. We have 19 people on the call. Who is able to mark daily bias correctly? The first person to mark daily bias and drop into the group. We have the group of 5 days exclusive master class. I want somebody to screenshot their phone and mark daily bias and drop it in the group. I want to see who is this person that can identify. Aha, the first person is Inda. Inda has successfully marked daily bias for GBP USD. Exactly. And Inda is saying that if that candle closes above the high of yesterday, we are expecting a bullish bias for GBP USD. Yes, Inda, can you make that statement and put that statement there? Make that statement there. The statement is, if today's price closes above, put a number. If today's price closes above certain number, we expect a bullish bias for tomorrow GBP USD. Write it like that. Yes, it's a conditional statement. I want you to mark your chart and write it like that. If today's candle closes above certain price, that price is that your red line, above or you can say the high of previous candle, the high of yesterday's candle, then we expect a bullish bias for GBP USD tomorrow. Tomorrow is 12th of January. So that is a professional statement about daily bias, a professional one. And we are going to watch out to see what happens when that happened. Yes. And I see Odili also, he's marking. But Odili, you are putting 2 mark. You know, I corrected myself. I don't want us to have double mark. If you are looking towards the upside, you just put a single mark. If you are looking towards the downside, you just put 1 mark. And Odili, I see you are using a trend, you are using a horizontal line instead of a trend line. So for daily bias, Odili, you have to use a trend line. You see, there is trend line, there is a horizontal line. You use this one, you use horizontal line, and it is not good. It is not clear. Don't you remove horizontal line. Don't use horizontal line. You need to use trend line. You pick a trend line. Use a trend line. Look for trend line. You draw the trend line. It's short. You drop it down. You use trend line for that. So if you use trend line, if all of us are doing the same thing, to be uniform, that's very good. It will be uniform, and everybody will understand what you are marking. So I don't need to stretch my eyes or think about what you are doing. I will quickly understand if you use a trend line. So in writing, I can write daily bias. I can write daily bias there because it's going to be bearish. So let me leave it red. I'm having a feeling that it's going to be bearish. So let me leave it red. But it's not good to actually predict like that. So now what I'm doing now is called labeling. I'm labeling my charts that the daily bias has been formed for my S&P 500 if the candle closed below. Yes. So thank you, everyone. I think everyone have gotten this. Everyone has gotten this. The daily bias is a function of 2 candles, the candle of today and the candle of yesterday. The daily bias should have only 1 trend line. If you are focusing on the up direction, use the up direction. If you are focusing on the down direction, use the down direction. Only 1 single trend line, not 2 trend line. And only 2 candles should be in your perspective. Only 2, that of today and that of yesterday. Choose one. If you are focusing to the upside, if you are focusing to the downside, depending on where you are focusing on. Yes, it's very, very important. So right now, I see that the price is moving upward, and I put my daily bias upwards. So if you can't cross upward, we are going down. Done. I don't want to overflow this now. The next concept I want to talk about now is order block. We talked about order block. And when we're talking about order block, I remember very well I said that the order block is the last candle that was formed before a massive push happened in the market. What is a massive push in the market? A massive push is an array or is a lineup of so many consecutive candles. So many consecutive candles gathering together. Fredo, if you unmute yourself again on this call, I will kick you out. How I wish your background is quiet. Look at what is happening here. This is a bullish move. 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 So this activity here we notice here. This is a daily candle. It is called a massive push. It's called volume added into the markets. It's the activity of a lot of buyers entering the market. In how many days? Day 1, day 2, day 3, day 4, day 5. 5 days consecutively, S&P 500 was buying. So, order block is the last negative candle that was printed in the market before all of these things happened. So, I mean that before you locate an order block, you must first of all have seen a massive push in the market. When you see a massive push in the market, that is where you can now trace back to say which candle was the last candle that sponsored this massive push. That last candle, that is a negative candle that sponsored the massive push of all the green that you see here, that candle is called the order block, this particular one. This is the order block. So when you mark that order block, it's a very important area in the market, the order block. The order block is a very important area in the market. Now, you see what I've done before I look for this order block. If you look carefully, you see what I've done. Let me go backwards again, so you see what I did before I located order block. I was currently looking at today's charts. Then I started going backward. I was looking for anywhere I can find massive push. Actually, it was this place, but it's not a serious one compared to what I'm seeing here. So this red one would have been my order block that I should call first before I even call the other one. This one is my order block. But I ignored this one because I was looking for something more better. This one also is an order block because there's a massive push. But I ignore it because I'm looking for something better. Traders who are on this call will know why I choose this one. The reason why I'm choosing this one is because this order block, after it was formed, there is what we call break of structure that happened here. So any order block that was formed, and after the order block happened, the market have a break of structure. That order block is a very, very strong order block compared to the other ones like this one. This is the last candle before this push. But there is no serious break of structure after this push. From here going upward, I didn't see any serious break of structure. So I don't really consider this one as a strong order block to pay attention to. Like this one too. It happened, there's a massive push, there's an order block, but there is no strong break of structure to the left-hand side. So it's not an interesting order block to look out for. Here, there is something like a massive push. It's not consistent. So we can call this as an order block, but there is no break of structure. So from where we are now, if you look backward, the only place where I can see a very clean, clear-cut, undoubtable order block is this one. So how do I mark order block? I can mark order block in two ways. But for the purpose of our team, I want us to be uniform. If you want to mark order block, you either use horizontal line, this one. Here, on the tip of that block, you drop it there. Horizontal line. On the tip of that block, the entire candle is called order block, the entire candle. Or if you don't want to use it, that's the bullish order block now because we are going upward. If you don't want to use a horizontal line, for a horizontal line, your chart will be neater. You can go back to this place. You can use a rectangle. You can use a rectangle. My friend Chooks likes using lines. So, but some people like rectangles. So you can paint this rectangle from the tip, the entire candle. You shade the entire candle and draw the line. Why are we drawing the line? Because in the future, we expect the price to come back and visit that order block in the future. It may not be very soon. It may be after many months. It may be after several years. That order block must be visited. That is an area where price pumped from. When price come back there, price will react to that area like this. Let me show you what I mean. A time in the future when price will come back, price will react to that order block area and push back upwards like this. This is what will happen in the future. Wherever price go, Agaracha must come back home. When it come back to order block, it must react to order block to the upward side. Somebody say there are cases where it will break the order block. Yes, that is called an inversion. Yes, and there is something we can do when order block is inverted. So, but the purpose of me showing you order block is for me to help you identify order block and label order block. When you shade it like this and leave it as order block, or you use a line to just mark the tip and you know it's order block we have marked. Order block exists at 4168.5 S&P 500 daily order block. This is actually a daily time frame, so daily order block. So you go to the writing tool, you can write, you can say daily order block, daily OB. So OB signifies order block. So I label it daily order block. So later in the future, when price comes to order block, price will react to this order block. Order block work like a springboard, like a magnet. It attracts price to itself. And when price comes to the middle of the order block push price away. That is like a magnet, repel, attraction and repulsion qualities. That's how the order block work. So assignment number 2, I want somebody to go to their phone and open NASDAQ daily time frame. Look for an order block you find in NASDAQ, mark the order block with a horizontal line, shade the order block if you like, and label it daily order block. Post in the group. I want to see. I have seen a very nice order block on this NASDAQ. I want to see who is able to identify it. Go to your charts, identify order block on your charts, drop it in the group. Daily, Madam Bola, I see your daily bias, but you use horizontal line instead of trend line. Next time, use trend line, madam. Trend line for that daily bias. It's easy for us to recognize that it's a daily bias. But for order block, you can use horizontal line, and for order block, you can also use the rectangle, that rectangle box. You can use the rectangle box. Let's go. Let me see who is going to do it first. Who can show us order block in NASDAQ? Go to NASDAQ, daily time frame, locate order block, use a rectangle to mark the order block, or use a trend line. No, not trend line. Use a horizontal line to mark the tip of the order block. Locate a bullish order block. Locate a bullish order block on NASDAQ 100 daily time frame. Mark that order block with a horizontal line and drop it in the chat box. First to do it. Who is the first person to locate the order block? I'm waiting. I'm watching the group. 5 days exclusive master class. Go ahead and put it on the group. Go to your WhatsApp, go to NASDAQ, open daily time frame. Please, I don't like seeing so many candles. Just go to where the order block is. Let me know that you are showing me an order block. An order block is the last candle that will be formed before a long push, a long massive volume push. Maybe 2 candles, 3 candle volume push is okay. But if the order block, it breaks a structure that is behind, it's a very powerful order block. If the order block is a big body candle, it's a very powerful order block. We call it high probability order block. If the order block is a quadratic candle, it's a low probability order block. Please don't draw it. We are not even going to pay attention to it. If the order block is a skinny candle, skinny negative candle, we will not pay attention to it. For us to pay attention to an order block, we want the order block to be a high probability order block. The order block should break a market structure previously, that is a previous swing. Then the order block should be followed by a massive push in the bullish side for bullish order block, a massive push in the bearish side for bearish order block. Up till now, I'm waiting. I can't see anybody sending me order block in the group. Is it so difficult to locate order block in NASDAQ? NASDAQ 100 daily time frame. I need to see the order block you can locate there. Who can do this for me? In that group, we have about 50 people 51 members in that group. Maybe I should add Chooks in this group. Chooks will locate it very, very fast for you. So maybe if we have some professional traders that will help you locate it fast. Chooks is a very great trader. Very, very great one. And Chooks is going to be part of our $30,000 PAM accounts and also the funded accounts. He has currently created his account. Chooks, I'm looking for your right number. Which number I can add? Is it only 2 people we have? We have 50 people in this group, and we have more than 24 people on the call. Why is it only few people? They are the ones very good. This guy, who is this guy? Audley Anthony. Your order block, you did not use the tip. You only used the body of the candle. No. ICT do not agree with this. Even me, James, I don't agree with this. Your order block is the entire candle from the candle high and the candle low. You have to mark it completely. This your rectangle. I love your rectangle because your rectangle signify order block directly. Your order block, you mark this order block in NASDAQ 100 daily time frame around in between 14,245. 14,245. Where is it? 14,245. Where is it? 14,245. This one. This is the one the guy marked. NASDAQ. Yeah. He marked this one. This is the one you orderly you marked this particular one. But you use the body. I want you to use the. Let me zoom so that these people can see what I'm saying. You need to use the entire candle of that order block orderly. So let me expand it so that everybody can see what I'm saying. Yes. Yeah. Look at my everybody look at my charts. See what I did? When he discovered the order block, look at how we mark the order block. You see? You see why I marked the candle high, the candle low. So the entire thing, you drag the line. So that zone is called the order block zone. That zone is the daily order block. So please label it daily order block. When you mark that zone, label it daily order block. When you mark that zone, label it daily order block and extend the rectangle. Because later in the future, we are expecting that price will come down to that daily order block, visit that daily order block, Agaracha must come back home. Then it will react to the order block to the positive side. Usually half of the order block is the best side. Consequent encroachment, don't forget, 50%. So we will look for buy entries from this order block area here to the upside. Yes, daily time frame. One day, this guy must come here and must pick this price all the way because this was the place where the market started moving. And we talked about there's something I say a very good order block must have broken a structure. This is break of structure. This is an order block. It is characterized by break of structure. And behind the order block, there is what we call sweep of liquidity. This is a sweep of liquidity. This is sweep of liquidity behind the order block. After the order block, break of structure. So this order block is a highly valid order block because it has a sweep of liquidity to the left. It has a break of structure after the order block. Very, very important order block. Do not underrate this kind of order block. This kind of order block, when price come down to a level, half of the order block, this level, that is 14,216.5 is the expected price where we will take a buy entry if this price falls down to this area in the future. Yes. Very important. That's order block. I want you to label. Let's do the labeling. I'll label this. I will say daily order block. Daily order block. I'll leave it there. So when I see that line, anytime I open this chart, I see that line, I know that there's a daily order block there. Forget about this one. This one is not really matter. I just show you this one because that's not how the market will move. The market will do some Makosa dance here before it comes down here. So this one, I need to mark it to qualify my order blocks. Where somebody say, why do you draw order block here? Why do you make this order? Why do you think this order block will hold? I have a strong feeling it will hold because there is a sell side liquidity, SSL. We talked about sell side liquidity yesterday. Go and watch yesterday's video. There's a sell side liquidity here. There was a sweep of this liquidity. There's something like equal high here, and this price sweep it. And after the sweep of liquidity, we expect a massive push. That massive push happened, sponsored by this order block. And during the massive push, there was quite a number of gaps here. I don't want to talk about gap now. I saw break of structure. So this is a break of structure. A high was cleared here. It's called break of structure, and market start rallying to the upside. So I can label this side. I can say break of structure. break of structure, BOS. So when you see BOS, we mean break of structure. Why are we writing break of structure? Why are we writing SSL? We are writing it because of this order block. So that when you see the analysis, you will know that this order block is a powerful order block vis-a-vis sell side liquidity sweep, break of structure happening from this order block. Therefore, when price returns ever, we are going to pay a very careful attention to the order block. That is why we are writing this, to further qualify or is it quality? Yeah, qualify our order block to be a serious order block to pay attention to. Please, if at this point, if I am making, can I screenshot my volume? Can I screenshot? My volume key is bad, but I'm following. Okay, I can't screenshot my. So, Madam Kat, if you can use your laptop, subsequently, you can also screenshot from your laptop. Maybe use your phone snap. I don't really know, but you have to find a way, madam. Your laptop can help you, something like that, or another device can help you, because as a trader, you need to always screenshot too, because you'll be communicating with other traders and you need to show them exactly what you are doing. So don't have your phone unable to screenshot for a long time. Find a way to fix that problem, madam. All right. So we are talking about order block, and from the way I see in the WhatsApp group, I noticed that some people have identified order block, bullish daily order block. Who is this person? Mohammed. Mr. Mohammed, you identified the daily order block, but you did not mark it the way we say we should mark it. We actually want you to mark it by a rectangle. Or if you don't want to use a rectangle, you can use a horizontal line above the order block. By the way, I don't like all these indicators on your charts. You can tap your screen and remove all those indicators. So I don't like them. And I don't think you should like them either. The days of indicators are over. Now we are analyzing the market the way where God created them, naked. I don't like this RSI on your chart. I don't like all those, what are they called? Is it Bollinger Brand, or is looking like EMA 50, EMA 25, and EMA 16 or EMA 14, something like that. I don't like them. Please remove them. And your order block, please use, I prefer you can use a rectangle. The rectangle is the best. Use a rectangle to shade the entire candle. Very important. Who is unmuting? Who is unmuting? Who is unmuting? Fredo. I can see you don't want to be on this call. But I can disable that people from unmuting themselves, because it's already shush. I don't know how this guy does this thing. Okay, fine. Sorry, an error on this guy. Nobody apart from Odili and Mohammed, nobody sent order block. Anyway, I'll proceed. Before the order block, we were talking about sell side liquidity. Sell side liquidity sweep. And that is the sell side liquidity sweep here. The sell side liquidity sweep is when you have a swing low that was taken out by price, and after price take out the swing low, the price move with speed to the upside. That kind of movement, this movement here is called a sell side liquidity sweep. A sell side liquidity sweep is when you have a swing low, for example, and when that swing low is formed, then price came down and swept that swing low, broke it and came downward, not just stopping there, move with speed and go upwards. So this activity here is called sell side liquidity sweep. SSL. Sell side liquidity sweep. Why do we like to label a sell side liquidity sweep? Because a sell side liquidity sweep is a signal for us to look for an order block. A sell side liquidity sweep is a signal for us to look for a fair value gap. A sell side liquidity sweep is a signal for us to look for a gap, for us to look for a volume, imbalance, gap, or fair value gap. Whenever you notice a sell side liquidity sweep, quickly open your eyes clearly inside that new move to begin to search. For order block, of course, one of the things you search for. After a sell side liquidity sweep is done, among that move that follows it, you search for gaps. Either a volume imbalance or a gap itself or a what now? Or a fair value gap. This is a volume, this is a gap. I mark this. This is a gap. So I'm going to write gap, daily gap inside it. Daily gap. So we expect price to come there and react. It's a daily gap. Then look at this one again that followed it. There's another daily gap here. There's another daily gap here. You mark it. We are going to pay attention to it in the future. Price will react to these gaps. So I'm going to label it. You see what I'm doing? I'm using trend line. And I'm labeling it so that I know what is exactly there. Daily gap. I'm going to put it above because when price comes, I will know that price is entering a daily gap in the future. I'm going to put it somewhere in the future so that when price comes, I will know that price is about entering a daily gap. There's another one here. There's a daily gap here. So if you're able to identify this on a higher time frame, D1, when you go to H4, your market will be so easy to be traded on H4. Your entry will be so easy to be located on H4. Everything, life will become easy for you. I do copy and paste right now. Daily gap. I didn't see any other daily gap again. I found another one. There's a daily gap here. I think this one, the market already react to this one nicely. The market react nicely to this one. This is one that is tradable in the most recent time. Look at it. Look at what the price did. After the gap was formed, copy and paste here. So after the price was formed, after the gap was formed here, the daily gap was formed here. Of course, I don't need to describe what daily gap is. You can see what daily gap means. The price was going up the next day. The next day, the price did not start from anywhere. It jumped all this price. See from here, how many pips it jumped. The price now started from here. Went up. Later on in the future, the price now pierced into daily gap. But now the challenge we have with daily gap is that we need 50% of the daily gap to be filled before we trade. That is if we are trading on if we are trading on daily candle, we need this to happen. But if we're not trading on daily candle, we can go to H4 and find the entry when this daily gap is when this candle comes to daily gap, and start looking for the entry from there for H4, which is better. So price tested the daily gap and price respected the daily gap and continue going up. It still means that this daily gap is still valid. Price is likely to come back to this daily gap later in the future to respect this daily gap or to violate the daily gap. If price violate the daily gap, it's now what we call inversion. I talked about inversion yesterday. And when the price inverts the daily gap, it's going to the next daily gap to go and fill it, because that gap must be filled. It must be filled in the future. This daily candle, for God's sake, it must be filled in the future. So, and you remember I say gap, fair value gap, daily fair value gap or volume imbalance, they serve as magnets. They attract price to them and they repel price to them. So this gap is calling for price to come back and fill it. And price will definitely come back and fill it. Either fill it partially and go on, or fill it completely and go on, or fill it and violate it and continue going down. So after this particular daily gap, we see the way where price treated the daily gap and formed something like this is the order block, and this order block is a nice one. Let me draw that order block because we notice an order block there. When you notice something, you draw it there. Let me use this rectangle. We say we'll draw an order block. So whenever I draw a rectangle now, you know what I'm drawing. You know it's an order block. So when you see my analysis, you see a rectangle, you know it's an order block that I'm indicating there. So I can even label it. I can label it. I can say daily order block. I put it here because in the future we'll make reference to it. Double click and put here daily order block. Done. So we have a daily order block here. Why do I call it daily order block? Because if you look carefully at this area, it has the qualities of a very nice order block. In fact, this is called high probability order block because of the actual nature of the order block. The order block is a very thick, huge candle. It's a very thick, huge candle. And after the order block was formed, the price, look at what price did. 1, 2, 3, 4, 5 plus gap. So this kind of order block is an order block that we have to pay attention to. Remember, I said I gave something like characteristics of that word suffer me for primary school. I nearly bad my tongue. God. So there is a liquidity sweep. I talked about characteristics of order block, and I say it it has liquidity sweep. Look at liquidity. Look at this is liquidity. Anytime you say a swing, this is a swing. This is all these lows here. What happened? It sweep its price went up quite okay. It came down and sweep all these lows. When we say sweep, it means that we have a lot of stop loss here. Price came and took out all those stop loss here by this piercing. And after the piercing happened, we say that in liquidity sweep, the next thing that will happen that you see price running away with speed. So that is a behavior of a liquidity sweep. We say sell side liquidity sweep. So if you see sell side liquidity sweep, if you see sell side liquidity sweep, let me label it so you see what I'm saying. SSL. If you see SSL, sell side liquidity sweep, SSL. And after the SSL, you see an order block. Let me expand this and do this correctly. This is supposed to be on the tip. Yeah, correct. SSL here, sell side liquidity sweep. This is a sweep of the liquidity. It took out all the stop loss here. And after taking out the stop loss, what we want to see after a liquidity sweep is a long push to the upside with speed. Bah, 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 bah. It went up. And when it's going up, we want to see something on the left-hand side. What is that? Please, what else do you want to see after a liquidity sweep? We see an order block. We want to see something again. Who can tell me on the chat box? What else do we want to see again? We see a liquidity sweep. We see an order block. We need one thing again. What is that thing we need? BOS, break of structure. Martins, you are following up. So we use a trend line and we go and mark break of structure. So when we see these three things, BOS, break of structure, it means that our strategy is set. Remember, we are talking about our strategy to make $25,000 monthly. BOS. So this is not time for us to play. It's not time for anybody to sleep. If you are sleeping on my call, you are wrong. If I have a hammer, I can break your teeth. This is a time for us to pay attention because serious money is about to be made here. And while men slept, the enemy will come and put chaff on your head. This is not a time for you to look at Instagram. This is a time for you to focus. Pay attention. Don't grieve for anybody. Don't allow sleep to chouse you tonight. Is Major Hamza here? Chai. Okay. So look at what is happening here. There is a SSL here currently. There is an order block here, negative candle. Nice. There is a liquidity sweep here. We've seen it. Clear out SL. There is a breakout structure here. Nice. There is a long push here. Nice. Now is the time for you to look for fair value gap. After all of these things have been seen, now is the best time to look for fair value gap after the other block. What is fair value gap? Fair value gap is 3 consecutive candles. 1, 2, 3. There's fair value gap. In between these guys, there's fair value gap. So how do you mark the fair value gap? You mark the fair value gap using your trend line. You pick this guy, you draw it here. You pick this other guy, you draw it here. This is exactly how to mark the fair value gap. You are absolutely correct if you are able to mark the gap like this. Absolutely correct. Then you have to label the gap. Now you see we are coming close to the market. Now, I want you to notice something. You notice that when I started this call, I started from behind, started marking all these things from behind. The reason I was marking from behind was because I wanted you to understand before we now come to where the market is. But in practical, you don't need to go back and start marking all those things. If you go back and be marking them, it's called you are building house in the past. You are making wealth in the past. You need to come to where the market is, close to the market, and look for these signs. When you are where the market is and you are looking for these signs, you are likely to find the trade and pick the trade. Remember, we are day traders. So you don't want to look for analysis that will eventually mature in the next 9 months. So you end up taking trade once in 9 months. So you want to look for these setups. It's called setups. Aha, thank God I got that word now. You want to look for these setups closer to where the market is. The reason I didn't start from it is because I wanted you to understand. So I went back in history to draw it. Now I'm back now in the future or in the present. So we have other block here. I've defined it from yesterday's call. I defined other block. We have a liquidity sweep. I've defined it. You can see it. We have a breakup structure. I've defined it. You can see it. After all of these signs have been shown, then we locate a fair value gap. Now that we locate a fair value gap, what is the characteristics of that word again? I don't like that word. The characteristics here is that, or the expectation, that the word here is expectation now, is that after the other block has been, the fair value gap has been formed and markets go away from the fair value gap, a time is coming in the future where the price will come. No matter how up it go, Agarata must come back home. When it comes back to the fair value gap will use that, will use the price as a springboard and push the price away to the upside. That is exactly what we expect from a fair value gap. So a time is coming in the future, not long from now, which is beginning from here. Excuse me. A time is coming from in the future, beginning from here. Price will come back down. It nearly happened here. It didn't happen. Now it's going back. But one day, I don't know how far, I don't know how long, it may dance Makosa here, but one day it's going to come back into fair value gap. When it comes into fair value gap, 50% level is our best place to start looking for entry. Entry to where? Entry to the upward side, like this. Now, am I saying that this must push the price upward? No, I'm not saying so. It has a capacity like a magnet to attract price and repel price. If the force of attraction of the price is heavier, that force will break this fair value gap and it's going to retest the fair value gap and it's going to push it downward. That process is called fair value gap inversion. And it's going to push it backward into the daily order block expectation here. Very important. Then it can maybe react to the daily order block, and this can be a liquidity sweep again from this side that will push it upward, something like that. So notice that the fair value gap must not push price in that same direction. It can be violated and turned upside down as an inversion. So you need to watch day 3. Day 3, I talked about fair value gap inversion. Watch the video. The video is live on YouTube. Go and check. I've shared also the link. Fair value gap inversion. I have the PDF. I have given the PDF for free to everybody. So if you don't yet have the PDF, send me a WhatsApp message directly. Say, I have attended your Zoom call. I have watched the training. I need the video recording of day 3. I need the video recording of day 2. I need the video recording of day 1. I need the PDF for day 1, day 2, day 3. I'll give you all the PDF. Everything is free. I'm not charging you a dime for it. Highest I will tell you is, are you a member of our broker? Do you have our account? Do you have a funded account? Do you plan to fund your account, or you plan to waste my time? So if your answer is negative, I won't even answer you, Seth. But if you give me impulsive answer. Oh, yes, I'm a member of your broker. Oh, yes, I have a funded account. Oh, yes, I plan to fund my account this month before ending of the month. Come on, I'll give you everything apart from my wife. I will even dash you money. So, guys, back to the course. Forget about, sorry about, is it sorry I'm saying? We are back from commercial timeout. Back to the class again. I was talking about the fair value gap. How I came about marking a fair value gap that is valid. Fair value gap is easy to locate, but not all the fair value gaps are valid. A fair value valid is a fair value gap that has a presence of a order block in it. A fair value gap that is valid is a fair value gap that has happened after a break of structure. A fair value gap that is valid is a fair value gap that is there, that has happened after a liquidity sweep is encountered. So this confluence coming together, and then you have a fair value gap. Please pay attention to that fair value gap. After this fair value gap, can we locate another one? Yes. If this is candle 1, this is candle 2, this is candle 3, we can draw a fair value gap in between these 3 candles. So let's go ahead and draw a fair value gap. So, but before then, let me label this one. You cannot afford to be tired on this call. It's impulse counter. So let me write daily fair value gap. Daily FVG. I label it. I'm watching out for that area. I'm watching out for that area. So I'm going to go ahead to go and mark this one now. There's another fair value gap here. Do I know which fair value gap the market is going to respect? How will I know? Am I God? I will just mark the line and watch out what the market will do. If the market comes there, I'll pay attention to that area very closely. I'll go to lower time frame H4 and look for my entry. In this case of our discussion, we have a fair value gap here that the market respected already, which traders took advantage of this fair value gap. This one. Traders took advantage of this fair value gap and they traded it. And they were in profits. 1 day, 2 day, 3 day, 4 day. This is the 5th day they are taking profit of that on that NASDAQ. One of that trader is my friend Dr. Willis. He marked this fair value gap since December last year. After these candles were formed in December, we had a Zoom call with Dr. Willis towards the end of December, and he was drawing. He didn't actually draw it as a fair value gap. He drew it as a Fibonacci level, and he started taking the trade on a buy limit entry. So he took this trade. Is on profit here, profit here, profit here, profit here, profit here for the last 5 days. I can bet that. Because I'm sure he didn't enter at all of these times. He's not selling NASDAQ. He's actually buying NASDAQ because beginning of the year, NASDAQ is going to pick up because it's a technology-based company in America. So beginning of the year, they have new strategies, new innovation, new products, new tech, all those new stuff make the stock, the index, NASDAQ index, 100 companies in America begin to pick up. So probably in the month of March, they'll begin to retrace, take profits, ending of month, quarterly, something like that. But that is all fundamentals and based on psychological feeling. But right now in the market, we are looking at the FVG, back to our FVG. This is a FVG here located in the market, and this is 50% of the FVG, and the market respects that FVG. At this point of respect of FVG, at this point here, this is where we can go into 4 hours time frame to look for our buy entries. This place here, where we see markets respecting FVG, we go in to look for our buy entries. Let me do that. When was this? This is 4th of January. 4th of January was the best time to buy NASDAQ. 4th of January, if you bought NASDAQ stock on 4th of January, today you will be in massive profits, even though you are using 0.01. So you see the importance of this because you are using an fair value gap to execute your order, and this fair value gap was respected. So let's go to H4 and look for 4th of January. NASDAQ 4th of January, we'll see what is happening there. NASDAQ 4th of January, what is happening here? We have a daily FVG happening on NASDAQ 4th of January, which is 4th of January. Where are you? Here. NASDAQ 4th of January, we saw that the price came into 50% of daily fair value gap. If price come to 50% of daily fair value gap, We will go down to smaller time frame to look for entry. Right now, this doesn't look like any entry at all. We cannot decide our entry based on red candle like this. So we will either wait for the price to react, or we will go down to lower time frame to look for entry. There are two things we can do here. So we leave this price, we leave it 4th of January, we leave it 5th of January, we leave it 5th of January. Yeah, 5th of January, Friday, is a very good time to look for entry again, based on what is happening here. But right now, there is no reason to enter because all of these have not formed 5th of January. We would either go to maybe M15. M15, 5th of January, we are in daily fair value gap for buy entry. 5th of January, M15. I'm looking for my entry because I see that we are in daily fair value gap for NASDAQ. So I'm going to M15 to look for that day. What day was that? 5th of January. 5th of January, M15. Where was NASDAQ? We are looking for an entry for 5th of January. This is 5th of January. Good. So this is 5th of January. And this area here is half of, this is actually the place. So it's indicating half of, daily. This is daily fair value gap. This is daily fair value gap. And this is halfway. This is equal highs. Equal highs have been formed here, M15, on 5th of January. Between, 5th of January in the morning, 5th of January in the evening. Equal highs have been formed. When equal highs have been formed, what do we expect to see? A sweep of that equal high here, SSL. I don't want to mark this now because we are in smaller time frame. So we see a sweep of the liquidity here. After the sweep of the liquidity, we want to see a push on M15. We've seen that push. In fact, that push came together with a gap. There was no any entry here. There's a gap here that have not been filled on M15. So I can mark that gap here. This thing is not analysis, is not analysising, because this gap created here, M15, was not filled. So what is the price trying to do? It's definitely going to come back inside it. So we didn't find any entry there. Based on other block, there is no entry on that 5th of January. We didn't see anything that looks like an entry. But in the daily time frame, we saw that we're halfway, but we didn't find an entry based on the strategy. So if I were following this strategy 100%, I wouldn't take the trade on an entry because there is no clear entry. We needed something that would be an order block and something that would be an FVG encroachment. Then we enter from that place and we shoot. But we didn't see anything. So if I'm using this strategy, I won't violate the strategy, I won't enter. So if I'm automating the strategy, the robot won't even violate it. So I will go back now. I didn't find the entry. This is 5 minutes. Oh, maybe because I was checking 5 minutes. Let me see M15. If 5 minutes cannot show me, M15 will not even show me rather. Let me see. Fifth of January. Where are you? Here. I've seen it. This 5th of January. There was a liquidity sweep to the downside. This fair value gap was respected. Daily fair value gap was respected. Bring it close here. Daily FVG. And there was a gap, but the market never came back to fill the gap. So we didn't see any entry. We allowed the price to go and do its thing. So we are waiting for price to come back into this area. If price comes into this area, we are going to eat it raw. We are going to eat it raw. Yes, we are going to eat it raw. When the price went up, price came down. What is this place? Is a gap. The gap was there was an inversion here. I think this is the best place for me to describe an inversion. This is the entry. We saw an entry here. That entry is a tricky entry. It's with these guys. When the price went up like this, I'll show you where I got an entry. I got an entry here. Price went up. The next day, price did not continue going up, but price now came down to start from down. So forming a gap here. Remember, a gap also has the same properties of a fair value gap. So the gap was formed like this. Aha. Perfect. The gap was formed like this. So price came down here, went to the gap, half of the gap. Normally, from our training, when we go halfway into the gap, we're supposed to take an entry and the price will continue coming down. That is what we learned from the book. Or we go 75%, we enter it, we bring the price downwards. Downwards actually to the take profit around this zone. It's not actually downward too far away. This is a TP. This will be the TP area. Yes. But if price close above the gap, that means it is called an invalidation of the gap. Therefore, we now have what is called inversion. An inversion states that after the price has been inverted, the price will still come back again into the gap. When the price comes back again into the gap, you take the trade after the inversion to the other side, to the upside. The problem with this now again is that this inversion came and encroached. It didn't really enter it. Now, this is the problem of NASDAQ. Because if you go to other pairs, you won't see all these gaps. You won't see all these half-half movements. If you go to other pairs, you won't see it. So this is the problem of NASDAQ. So it's difficult to actually catch these moves in NASDAQ. So you take it like that. It's not easy to always see the trade. That's why we have several other assets we are watching and we're looking out for them. But however, what I can say from all we have seen so far is that we're expecting price to drop down. This is invalid. We're not going to use this anymore because price has traded through it. We're not going to use it. The only one that price has not traded through is this one. This one here is a powerful one. There's a daily FVG here. There is also a 4 hours FVG here. So we are looking at for this one. What I'm expecting in NASDAQ right now, I will buy NASDAQ if I see a drop to this level. Sorry. If I see a drop to this level on NASDAQ, I will go long from here. I will take that long all the way to the top. Oh my goodness, sorry. Right now, I'm not looking at shorting NASDAQ for the long time. If I have to short NASDAQ, I'm just scalping. But my bias on NASDAQ is bullish. So, and the stop loss is better 1:3 because of where my TP is going to be. So if I go to, this is my bias. I want price to come down around this level before I start buying NASDAQ. I'll start buying NASDAQ from here. Yeah, M15. If I go to H4, I'll see what that means. I'm done. I've shown you so many stuffs in practical today. I've shown you so many stuffs in practical. And I'm sure that those of you who attend yesterday's class, day before yesterday's class, you will understand all these drawings. You understand because they are stuffs we talked about yesterday. So here my bias is saying that if price drops down into this zone here, why is this zone? Into this, from here, we're supposed to even start looking for a buy entry from here. Yeah, we start looking for a buy entry from here. So I say from here is okay, and SL is here. And this is based on, there is a fair value gap here, daily FVG here. So if we enter from daily FVG here and we allow the SL to be here, we are still very okay. We are still very okay. So we can enter a buy from here, we can enter a buy from here, we can enter a buy from here. So we have 3 areas where we can enter a buy from in NASDAQ if price ever comes down to that zone. So we leave this like this and we watch. Also, we still have, if price violate this place, we still have more entries for a buy on the, this is daily order block. On the order block, I don't prefer using order block. If this is violated, Then the last one will be this one. The last one is this one. I don't prefer using order block, so I won't take the trade for an order block. So this is the only final place I can take the trade. There's a fair value gap here for H4. Fair value gap for H4 is the last place. My stop loss is here. My stop loss is here. If this stop loss is hit, I've been defeated. I will allow the market go. What is this one? This is sell side liquidity. This is a gap here. I won't trade this one, rather. I just want to trade this move. That will sweep off this liquidity, take it from here to the top side, then allow this to do its thing, before we move again. So this is the most recent trade I can take in NASDAQ, and this is 4 hours time frame. So when can this likely happen? Let me go to daily time frame to see when can this likely happen. So this is why we cannot jump into NASDAQ and pick a trade and start trading immediately, because we have to analyze and write so many expectations and look at the market. If the market meets our expectation, we trade. If the market doesn't meet our expectation, we leave it alone. This is the daily. The daily bias is saying that if the candle closed above this yesterday candle, we are still going up. So there is no area for entry, because remember, area for entry is based on discount and premium. We talked about discount and premium yesterday, that if you mark a swing low and you mark a swing high, that your buy entry should be from area of discount around this side down here. Your sell entry should be from area of premium around this side. So you shouldn't be thinking of buying when the price is at premium. So even if you draw it as per swing high, swing low from here to here, even if you use this as your swing low and use this as your swing high, your discount, oh my God, sorry. Your discount and premium level is still clear. Look at your discount area is all this area from around here is your area of buy. So you don't want to be found buying NASDAQ at this area, because this is the swing low, this is the swing high. So, and this is the price coming downward. So your buy area should have been any area you see price around this side. And price have already done that, and we didn't find a trade. Maybe if price come back again, we might be able to find a trade around this zone, around this zone, around this zone, around this zone before our SL area. We can find trade there. If we find a trade there on M15 or H4, we will take the trade. And when we take the trade, we are safe, because we are taking trade on the discount level. This is the discount area. And when we take the trade from the discount level area, where's our take profit? Our take profit is the premium area around this zone here. Any swing that the market with the price will take there. So I'm sure I've mentioned so many things we discussed during the first 3 days of our course. And we have the PDF for day 1. We have the PDF for day 2. We have this is my expectation. We have the PDF for day 3. Yeah. So for scalpers, because a lot of people are talking to my mind right now. You say if this price close as a bearish bias, can't we look for sell opportunity? Yes. If this daily bias can close as a bearish bias, and you know the condition for that, if this green turn to red and cannot close above the previous day high, that means it's giving us a bearish bias heading to our entry zone. So I can look for sell opportunity in NASDAQ, scalping on a smaller time frame. The same strategy, but now in a bearish direction. But if this daily bias cannot give me a bearish direction, I will never sell NASDAQ. I would rather wait until I see price giving me this zone. If this zone is not there, I will wait for price to break this zone and form new zones. Then I will start looking for buys on NASDAQ. So the hardest part for a professional trader is to sit down and wait for the market. Traders don't like to sit down and wait. They want to force the market to show them a signal so that they can start buying immediately. And the market is not like that. This is why we have collaborated with many companies. Like, you are using M5 instead of M15. It doesn't matter, bro. I changed to M15. You saw it, right? It doesn't really matter. This is why many traders have decided to partner with companies like Envision U. Envision U has Courtney Logan, has David Imonite, Ivan Tapia, several other guys. So what they do is that they send this same analysis. They send this same analysis to their app. So when traders see the analysis, instead of you going to stress yourself, going to label all these things have been labeled already on their signal. So what do? You pick out the signal and you place it on your own chart and you begin to judge it. Like today, we saw a signal on gold. When we brought out that signal and placed it on our own gold, we made crazy money from it. All the traders that were taking that trade, they made crazy money from it. And it's quite interesting because when we saw the signal they sent and we judged that signal based on what we have learned, this is gold. We put in our fair value gap on gold. When they sent in that signal, we don't rush to take the signal because this market is risky. You can lose all your money, and nobody will ask why. In fact, you can't even go close to the broker. There is a fair value gap here, and there was an encroachment here. Respected the gap. The price went up. It came back into fair value gap almost 50%. So from this level, they started calling the trade. I knew it was a safe trade based on the daily time frame. I knew it was a safe trade, and I was excited to see it. I saw traders picking the trade, and they were all making profit. I was excited. Up till now, this trade is still valid because the fair value gap of daily have not been violated. And if you look behind this trade, you will see there is a break of structure. See, there's a break of structure here. There is, although the other block is very weak, I don't really like this other block. It's very weak. And there's also a sweep of liquidity. Look at it here. It's small, but it's clear. On the daily candle, I can see the sweep of liquidity is small, but it's clear. I'm even trying to pity itself. It's just even this one. But if I extend it back to this one, it's called equal lows. There's a sweep of liquidity SSL here. So when I saw that signal, I knew that this signal is a highly valid one. So I saw a lot of traders deciding to take the signal, and it's okay if they take the signal, say liquidity sweep here, then see this push, then they were now calling the signal for a buy. And you saw the results. Now we are expecting, if this candle, based on daily bias now, if this price can close above yesterday previous, then we are going up. What is the conversely, if this price cannot cross above this today, if today's price cannot close above here, then our bias is still downwards. Our bias is still what? Downwards. So that means it's possible for us to go to 50% consequent encroachment of that gold. It's possible if daily bias is not respected. So if you are in that trade, usually you have to use risk management. Make sure you cut your losses short. Make sure you take your profit once you are in profit. Don't wait until you clear all the money. Go back and check daily bias. Go back and check the fair value gap of the daily. Go back and check consequent encroachment. There is still allowance, because what I can see here, this is fair value gap labeled from this part, this part there. Fair value gap was labeled from here. Am I correct? I think the line is looking a little bit straight. Fair value gap was labeled from here. Price entered it, but price did not go. Okay, this is the second leg, the second hand of the FVG. Then let me clear this. I'll end here. Our time is up. This is 40 minutes past 10. We're supposed to end. I don't feel like stopping. You see this analysis, we can sleep on this thing, just be drawing this thing. It's exciting. It's time consuming. It's excruciating, but we enjoy it because we see the whole life inside it. It is sweet. Where just analyze the market. This is what I'm drawing here. This one. It is sweet to analyze this market. Right? So I'm talking about consequent encroachment, half of fair value gap. It has not been met yet. So it is possible for this price to have a bearish bias and still come down to give us a nice entry to the upside. Why? Because there is a fair value gap that have not been filled. And it's possible for this price to still come down vis-a-vis daily bias not met to 75% and give us a nice entry from here for us to go long. It is possible for this fair value gap to go here and close below the fair value gap. If this happens, fair value gap is invalid. What we'll be looking out for is break and retest to go down, which is called fair value gap inversion. So whichever way it goes, we are still in this game. We'll play it. Cut your losses short, minimize your loss, use smaller loss size compared to your account. For me, I will always prescribe 0.5 risk on your account, because if you are risking 0.5 on your account, it will take you, I said it yesterday, it will take you 12 wrong trades for you to lose 6% of your account, which is still very okay. But if you are risking 2% per trade, okay, it will take you 5 wrong trades for you to lose 10% of your account. So which is better? You have more trades to take, more mistake to make, and your account is not lost more than 6%. And if you are doing 1:3 risk reward ratio, like in this trade, most of the traders that took this trade, the take profit of this trade is actually to the top side, around this side or this side, somewhere like that. Abi? The take profit for, if this trade peaks now, let's say you enter from around here, or let me even use the current price. Let's say you use a good risk management. You enter for around here and you leave your stop loss here. The take profit is here. If the take profit is here, this swing high here, it's coming to clear this liquidity. So your risk reward ratio is supposed to look like this, and therefore your entry is supposed to be somewhere around here. This is because this is your target. So this is 1:3. Your entry is supposed to be somewhere around here. It's okay. If your entry is here, your stop loss is nowhere to be found. Therefore, your entry should be somewhere around here. The best entry for this gold, for me, my own personal opinion, the best entry right now, looking at the market right now, the way it is, and based on risk management, the best entry for this gold is 2010. So mark 2010. If price comes to 2010 and you find an entry, this is a daily time frame. If you find an entry on 2010, it is the best opportunity to take this trade, because your stop loss is 1:3 and it is below the fair value gap if it's being violated. By the way, sometimes this thing can violate that fair value gap and by a piercing and just still go back again. So I think you have to be very, very careful again. It's still a question of risk management. So that's 50% consequent encouragement. For me, is the best entry for that gold. So if the price of gold comes down vis-a-vis daily bias, I'm watching that daily bias that is tending to end in the daily bias tends to end in a negative, in a bearish bias from here, from the next candle, which is the candle for today. So I'm considering the fact that daily bias is going to be bearish. And if daily bias is bearish, we're expecting to come down to 50%. Then if we find entry around 50% consequent encroachment for daily fair value gap here, we are expecting to see entry. If we find entry here, it will be the best entry. Then we'll put our stop loss under it. And I think this may likely work because there is no sweep of liquidity. There is no bullish order block. This is a weak signal. It's still a weak signal. It's still a very weak signal, and the stop loss is okay to be here. I didn't see a sweep of liquidity to the left hand side. I didn't see order block to the left hand side for this particular entry. So it depends. It's really depends. So we watch and we see what happens tomorrow. Ladies and gentlemen, my time is up. Over the board. I have gone over the board. I have explained this thing more than necessary. So I think today what we were able to do to balance all that we said is we had a class day 1, we had a class day 2, we had a class day 3. And we mentioned so many things, so many names during that class. We mentioned FVG, we mentioned imbalance, we mentioned volume, we mentioned, if you can share Hakam, it's even, I'm not getting what this guy is saying. Bro from Benin Republic, what are you saying? Okay, we are done with the class, brother. All right, so many things we talked about in day 1, in day 2, and day 3. And we have the PDF we shared to everybody, but we wanted them to see all these things on the live market. And that's what we have been able to do today. Tomorrow is the last day. Tomorrow we are going to be picking the trades. We'll call out the trade and pick the trade. We'll jump on the trade on a demo account. On a demo account. Very, very important. Ladies and gentlemen, I want to end here. But before I leave, can you take question? Okay, please go ahead. Before I leave, I really want to appreciate all the leaders, especially Commercial Director for African Market, David Alagbada, is here. He took out time to be on this call, be on the other Zoom call, several Zoom calls we usually have every day. And I wonder how he's managing to be on all the Zoom calls. He's here tonight to tell you guys to fund your account, to tell you guys to take this business seriously because dollar is going high, especially those of you in Africa. Dollar rate is going high, and you having a broker account, funded accounts, learning how to trade, even trading on it, taking advantage of copy trading. Emmanuel Francisco, you have copy trading. It's an exciting thing. Meta trade guys who are trading on the Palm accounts, their account is going on very well. Today, I saw some good profit they made today, exciting one. And I'm sure everybody's excited. So you can't be attending this Zoom call and you're not benefiting from all these opportunities where you can be adding more dollars to your account on a daily basis. It will be a financial, there's a word for iniquity. It will be a financial iniquity for you to be attending all these our Zoom call and you are not making money while you're attending the call. We have copy trading, we have PAM, we have rebates, we have so many offer opportunities. Without you actually trading, you'll be making money, and you are attending the Zoom call, you are not making money. It will be a financial iniquity. Don't do yourself that havoc. So thank you so much for being on this call. Dr. David, if you can, if you are watching, if you are hearing, if you want to say a word or two before I end the call, I think would give you that opportunity. We have Catherine from Canada. She's been here from day 1. So let me see if